Welcome to the ninth episode of Made in India, a podcast where we explore various Indian businesses, uncovering their fascinating stories and insights for business enthusiasts like you. In this episode, we are excited to discuss one of the global coffee giants based in India itself, CCL Products Ltd, a company that's turning everyday moments into rich, flavorful experiences. From humble beginnings in India, CCL has grown into a powerhouse blending innovation with tradition, delivering coffee that fuels millions worldwide every day. To discuss this business with us today, we have Nitya Shah, co-founder at KamayaKya Wealth Management, a SEBI-registered research firm and a small case manager. Nitya has been an active investor since 2019 and co-founded KamayaKya in October 2022. In this episode, we discuss interesting things like the coffee value chain, segments involved in the coffee market, the rising importance of instant coffee in India, the entire journey of CCL Products Limited, unit economics of setting up and managing large scale operations related to coffee, and much more related to CCL products and the coffee market. So sit back and enjoy this insightful conversation with Nitya Shah covering the coffee industry and CCL products in particular on Made in India powered by Bastion Research.
Uh, Welcome to the show, Nitya. Thank you
Thank
so
you so
much
much.
for agreeing to do an episode for Made in India and coming here, taking the time out and agreeing to discuss the company with us. So before starting diving into the questions, I would like to provide a standard disclaimer to all those who are watching. So all the information that is shared on this episode of Made in India is purely for educational purpose. In case you decide to act on any information that is shared on this episode, we strongly recommend you to conduct your own due diligence and consult your financial advisor if you have any. Also, please be aware that the guests and the hosts on this podcast may maintain positions in the securities of the companies that are being discussed here. So, with that disclaimer, once again, thank you, Nitya, for being a part of this. And the first question which I would like to ask you is a very basic question. So what I want you to explain is the basics of coffee value chain. So right
Okay.
from the stage where it's a plant to the stage where it reaches the uh, cup of the actual consumer, how does the
Right.
coffee value chain look like? If you can just give us a basic background about that, and then we'll build on to this further as we go ahead.
Sure. So thank you so much, Navid Bhai, for having me on the podcast. I'll just give you a basic introduction about what we do at KamayaKya Wealth Management. So we are a research analyst firm, and we also manage a small case. We are fully fundamental research focused, and we look at mainly all kinds of companies, even small caps, micro caps, large caps. But the main focus is on value-based investing. And we always try to look for companies which have a moat or a competitive advantage available reasonably. So CCL Products was something that caught my eye a lot of years ago. I've been tracking the business since around COVID times, around 2020. So it's been a good 5 years now. And I've always, understood this at a deeper level because I myself, I like coffee quite a lot as a beverage. So I'll first even give you a quick story as to how we, even came across this company. Uh, if you would like that, I can explain that now itself, and then I can, build on the value chain.
I think we can start with the value chain, and as and when we move ahead with the company, we'll
Right.
cover all those aspects if you don't mind.
Sure. Okay, just 1 second for the value chain, right? And yeah, another disclosure is that I do have a coverage on this company even at the moment, and we are also invested in a personal capacity. So, quickly coming to the value chain of coffee, how it usually works is that first it starts with, the seedling of the coffee bean, which is the green coffee bean. Then it cultivates and grows. Then after that, there's a primary processing. Then there's a drying of the beans. Then there's milling and hulling of it. Then after that, the beans are graded and sorted, right? As per, whatever needs to be exported accordingly, the kind of beans, like the two main kind of beans available are Arabica coffee and Robusta coffee, right? So as per the requirement, they are sorted. Then after that, it goes to roasting. Right, so roasting is a very critical procedure in the entire value chain because that decides the bitterness of the coffee. So the more it's roasted, the more coffee will be bitter, right? And there's two types of techniques to do this. One is spray dried coffee, and the other is freeze dried coffee. So freeze dried coffee is a higher margin and a much richer taste of coffee. If you'll notice, like you can clearly make out the difference between the two when it's spray dried versus freeze dried. Freeze dried is a lot finer, a lot more refined. So after this is done, it finally reaches the packaging stage, and then it moves to the final product stage, which basically goes to cafes or retail or whatever kind of you know final product is required. So that's the basic value chain of coffee.
Perfect. Thank you so much for that, basic understanding as to where it starts and, eventually how it reaches the end consumer. So now, Nitya,
Right,
I would just want you to, paint a picture for us in a macro sense, right? What I want from you is three things, right? First
right,
is, what are the major segments that are involved in the coffee business? That's one.
mhm,
Secondly, what I want you to tell us is the kind of
right,
market size that this industry have, at an international level as well as in India. So what is the,
sure,
market size? And lastly, what I want you to tell us is the subsegments that this business has. Which
right.
subsegment is witnessing a very strong traction or very strong growth right now, and why is it? So, sorry for a three-part question, but was just trying to, paint a proper picture for the listeners so that,
Absolutely.
we can have a very good background of the industry, and then we can build on the idea.
Sure. So, like as per a lot of stats and industry reports that I've gone through, this is the basic understanding of what I could see as the entire coffee value chain and the coffee industry segments. So you can say the global value of the total coffee industry should be close to around $250 billion, around about the entire global industry. And around 55% of it is roasted coffee, and the remaining would be instant coffee, right, where you're literally just putting the powder, put it in hot water, cold water, and it's ready. So instant coffee has become quite famous of late, and I was mentioning those two techniques, right, the freeze dried and spray dried. Those are used for instant coffee. And
Okay.
CCL Products is I think the market share in their exports for instant coffee is around 38% globally. So CCL Products has built a lot of scale when it comes to coffee processing, Around 38% market share is a very big, big number. And I've always realized that in commodities like coffee, so coffee, if my data is correct, it's one of the most traded commodities in the world. Like after crude oil, coffee is very, very highly traded. So on that basis, I've seen that there's a lot of demand for coffee over the years, and the instant coffee market, as per data, is 15.7 billion. This is recorded as of 2022. It's $15.7 billion. And in India itself, this market is expected to reach, I think, $3.2 billion by 2028. So it's become quite a sizable market in India, and I feel that the consumerism shift is slowly happening from tea to coffee, especially in the younger generations. And there's like a lot of niche coffees. There's specialty coffees. It's now started moving into powdered forms, coffee pods, capsules. So I don't remember the exact numbers for that, but those are much smaller segments as part of the coffee industry.
Hmm.
So just to make it slightly more clear, so
Yes.
this coffee industry can broadly be divided into two segments. One is the coffee which is sold to uh, larger, uh, or let me say, business to business kind of
Yes.
a segment, and
Larger
then there
coffee
is
houses, chain houses, probably.
Exactly.
And
Yes.
second segment can be directly, so
To the
this is
consumer.
coffee directly sold to the consumer in pouches and all those things. Okay.
Exactly.
This is the
Yes.
broad division, and 45% you said is the coffee sold through
Instant part.
pouches directly, instant,
Yes.
yes.
Yes. Instant. And 55% is through the roasted part, like which is prepared in, and sent to the businesses, as you rightly mentioned.
So these are coffee beans which are roasted and directly
Yes.
sent to
Yes. Processed
at
coffee beans.
B2B trading. Okay,
So for
perfect.
CCL, the mix is largely, I think, you can put it
We'll
as
cover that.
okay. Sure.
Perfect. So I just wanted to have a proper, understanding of the division. Perfect.
Right.
So,
I'm unable to hear, I think.
oh, sorry, yeah. So
Yes.
you talked about instant coffee. So it's interesting that instant coffee is almost like 50% of the total pie, right?
Right.
In terms of volume. So
Hmm.
what has led to this, first of all, emergence or popularity of this instant coffee, right? And
Right.
how is it, trending going forward? Is the share declining or is it improving? How is the, it playing out?
So I think what's happening with instant coffee is that the convenience factor is the main thing, right? That people are
Okay.
looking at convenience as the primary factor, that it's very easy to prepare and very quick to prepare. So that's
Hmm.
the reason the adoption has increased a lot over the years. I don't remember the exact trajectory of how much share it's occupied, but I for sure know for a fact that it won't decline. It'll at least
Yeah.
maintain or even increase from here for instant
Mm-hmm.
coffee.
Okay. Got it. So, now that we have, a holistic understanding of the industry, the size and the value chain and everything, let's
Right.
get into the main meat of the matter, that is CCL. But before we discuss about the business, let's talk
Hmm.
about your process, that how did you guys end up, discovering this business, and why
Right.
did you, decide to get into the integrities of this business to understand the business model in detail? Over to you.
Definitely. So it's quite an interesting answer for this. So my co-founder Aniket and I, before KamayaKya even started, like he and I both had an interest in, trying various types of coffees. And Aniket himself has also been to Vietnam before. So
Okay.
he's seen a lot of these, plantations and how coffee is prepared and how it's brewed. So he's seen it quite closely. So he once showed me that instead of, taking the Nest cafes and the common ones available, to try continental coffee, because they had this thing called a chicory mix in their coffee, which was something different. He said that it's a different type of taste in this coffee. And CCL would also sell these, flavor packets of hazelnut. So
Okay.
this is something that I found very interesting, that you're able to add
Hazelnut
another.
coffee.
Sorry?
Hazelnut. It was hazelnut coffee, right?
Yeah, so it was hazelnut syrup which you add to the coffee, and it gives it a hazelnut kind of flavor.
Ah,
So
okay.
they were giving you the syrup pouches along with the coffee, and you could
Ah,
combine them together and have. So once I
okay.
started having it, then there was no going back, because I started liking the taste. That, I was used to having like an Americano or a black coffee every morning when I wake up. But I was like, if you can add some taste into it, like now I'm not able to have it, of course, off late because I'm traveling. But back in India, I have it quite often, because I'm a firm believer that if you don't like the product, I don't think you can invest. Like
Hmm.
whatever kind of products, if I have a chance to try it or experience it, that will be the first focus for me, whether I think that this business is investable or not. So Aniket and I, we discussed this entire idea, that it looks like a very interesting business, and we ourselves were seeing that even in our friend circles, like very less people drink tea anymore. Like it's clearly moving towards coffee. So
Hmm.
then I knew that this company was listed at the time. This is during COVID, by the way. It's around 5 years back. Okay,
Okay.
so I went online, I started reading about the company, and then coincidentally, one of my connects, who's, a private equity fund manager at the time, he also brought up this company out of the blue. Like he just messaged me about it, that have you ever had a look at this company? And I was like, sure, if he's saying something about this company, kuch to pakka hoga isme,
Hmm.
that there's something worth looking into. So then after that, I started going through all their literature, whatever was available, the value picker threads. I was just reading their annual reports, seeing the con call transcripts. And I saw that, it's a very conservative, stable management. They've built a huge scale over the years, and constantly they are able to, scale up the business and increase their, wallet share in customers. And most of the coffee chains also that we would visit in Pune, like, there was a Blue Tokai which came recently. Earlier, there was
Correct.
Third Wave. So all of these guys were their clients, right? Like these big
Oh,
brands
interesting.
were they were getting the coffee beans sourced from CCL. So CCL that way has a very, very strong relation with all these coffee chains in India. So I felt that you're technically, playing the entire theme through this one company.
Hmm.
That's how I
Interesting.
came about it.
Interesting. So
Yeah.
now coming to the company itself.
Mhm.
So can you, briefly walk us through the entire journey of CCL since, the company was incorporated and
Right.
basically stop upon the major milestones, which has resulted into company becoming what it is today.
Sure. So I would say that the first, spray dry coffee they had started in 1995, and that was a
Okay.
very small capacity of 3,600 tons at the
Okay.
time. And later on, they even tried to, experiment with Jyoti Labs to, scale up this product basically. But that venture didn't work out with them because they were not able to get the volumes which they were looking at.
So they were
So
trying to capture Jyoti Labs distribution network. Is it?
yes, exactly.
Okay. Okay.
And they were not able to scale up through that procedure. So that JV got terminated, right?
Okay.
And after that, they set up a plant in Switzerland for agglomeration. So they set up a 3,000 ton agglomeration plant. Then in 2010, they expanded into Vietnam, where they started a spray dried coffee plant over there of around 10,000 tons.
Hmm.
And then Dhire Dhire, they kept building their scale. And today they've reached 77,000 tons of capacity.
Okay.
So it's become a very big scale company now. From 3,600, they've reached 77,000 from 1995 to 2025. So it's been an interesting journey. So the promoter today is Mr. Challa Srishant. His father started the company, and
Hmm.
then his son took over and he's taken it to new heights.
Hmm. So since you mentioned about the capacity,
Mhm.
so any sense on, can you give us a geographical map? Like you said, they have plant in Vietnam as well, right? So
Right.
where do they have their plants? You have already mentioned the size, but can you help us benchmark if it's possible in terms की दूसरे peers अगर कोई होंगे तो वो कितने size के हैं, उसके सामने छोटा है बड़ा है या opportunity size के सामने कितना बड़ा plant है basically उसका, right?
Like you mean to
And
ask that what's the capacities in their peers, right? Like what's the
yeah,
level of skill their
yes,
peers have
yes,
achieved?
yes.
So I'll be saying it in terms of coffee processing.
Okay.
Okay, so I have a list of, I'll just go through that quickly and tell you that what is the scale of their competitors. Just one moment. Yeah, so as I was mentioning, so CCL products, I would say they have the largest scale globally when it comes to coffee processing. They have the lion's share in coffee processing. So 77,000 tons is a very big capacity. The next biggest capacity is of this company called Olam Food Ingredients, which is in Vietnam, Spain, and Brazil. Their capacity is 35,000. Okay. And then there's Tata Coffee. They have 17,000, where 8,000 is spray dried coffee and 9,000 is freeze dried coffee. Then there's also ILD Coffee Vietnam, which has 5.6 thousand capacity. And the last is in Indonesia called PT Aneka Coffee, which is 8,000 spray dried coffee. So I would say scale wise, CCL has really achieved a very large size. And the reason is that they have access to, thousand number of blends. Like the types of coffee are so many and they cater to all of them. So it becomes like a one-stop shop for all these brands who, if they want to do Arabica, they can source it through them. If they want Robusta, they can source it through them. Freeze dried, spray dried, you name it, CCL caters. So that's the reason that it's very sticky as a business for them. That once you start dealing with them, you might not want to change because it becomes like a one-stop solution for you. So the stickiness of the contracts is quite good.
Hmm. That's interesting considering their size.
Yeah,
Also,
that's the reason. So I'll give you a quick stat about this. I had read it in one of the other firms initiating coverage report. So they have expanded their capacity 15x in the last, say, 2 decades without diluting any equity. They've not
oh,
diluted any equity to do this.
everything
Everything
is,
is debt funded.
oh, nice.
Everything is debt funded. So they've, built up huge scale globally. They've got a huge market share, and now they've not even diluted any equity to do so. So we as shareholders are now reaping the benefits of the scale. So if you had patience, you saw them scale up and utilize properly,
Hmm.
and they've done it very smartly. They've only increased capacities when the demand was very clearly visible. Because I've noticed with a lot of companies is that when times are good at the top of the cycle, they end up doing a huge capex, and then that capex goes waste because the demand starts falling, right?
Correct.
So what they did is that whenever they saw some clear visibility of revenues, only then they expanded their capacities.
So basically, they had some soft commitments from the customer. Is that so?
Yes, yes,
Okay.
So continuing, let's stay on this point where you are saying that these guys have only expanded capacities when they had some business visibility.
right,
So, in line with that, so my assumption is the capacities would have come in spurts
right.
because demand is not always going to be stable, right?
Mhm.
So, can you just explain what were the crucial years for the company where so you said they have increased capacity 15x, but
Right.
as I said, it would have increased in spurts, then it would have
Mhm.
stagnated, and then again a large increase. So can you just explain as to how has this increase been over the years?
So I would say up to 2010, the scale of operations was not as anywhere as close to how it is today. Post 2015 is where this really started, going up and up. The production capacity in 2015 was around about 18,600 tons, and that today has reached 77,000. So over
Mhm.
2015 to 2025, they've, increased their capacity multifold. So the last 10 years, this last decade has been very, very important for them to reach scale. Like today, where they are is because of the last 10 years of work.
Perfect. And what will be the mix? Let's say they have 77,000 tons
Mhm.
worth of capacity. How
Yeah.
much would be in India? How much would be in Vietnam? What will be the mix?
So the major share of the entire production, don't remember the exact number, but it's completely in India. Small part of
Okay,
it is in Vietnam. So
perfect.
I can tell you in this way though, around 60,000 tons is spray dried coffee, and 12,000, sorry, after the new capex, it'll reach 17,000 tons of freeze dried coffee.
Perfect. Okay.
Yeah.
Okay.
It'll be split into 60 and 17.
Okay.
Okay.
So next up, I want to just try and understand the unit economics as far as CAPEX is concerned. So let's say if I have to set up a plant to manufacture 1 metric ton of coffee, what
Yeah.
kind of CAPEX do I require as a company?
I mean, there's no clear, straightforward answer to this, considering that CCL has done this over and over multiple times. I'm sure they've, reached a way to efficiently fund their capexes that they won't be overspending on, particular equipment, and there might be synergies from past equipment and all of that. So I can just give you a roundabout answer. This won't be like a definite answer, but I
Absolutely.
can put it in this way that, say, for example, for freeze dried coffee, the cost of setting up even 1 ton for that is much more expensive than it is for spray dried. Okay,
Okay.
because it's much more higher margin. There's a lot more processes that go into it. So I'll put it this way that it cost them around 420 crores of capex to set up. I'll tell you how much exactly. Yeah. So for 6,000 tons of freeze-dried coffee, it cost them 420 crores. So per ton, if you just look at it in that way, it comes to, I think, around about 7 lakhs, if I'm not wrong. Like 7 lakhs per ton is the cost for spray-dried. And you can say that for freeze-dried, the same cost, sorry, for this was for freeze-dried. For spray-dried, it would be around about 2 lakh 50,000. It's much cheaper. Like for freeze dried, it's 7 lakhs, and here, like I'm just saying on basis of the spend that they've done for the capex and what's the capacity addition. I'm saying it on those basis.
Perfect.
And for And for spray dried, they spent 400 crores for 16,000 tons of spray dried coffee. So that comes to around 2,50,000.
Got it. Got it.
So if
Okay.
you see in that way, it's almost one third the cost for freeze dried, for spray dried.
Understood. That's helpful.
So,
Much cheaper to set up for spray dried.
got so now coming to their business, uh, so they have I think two businesses, right? B2B and B2C. Uh, so can we get into details like what exactly we do in B2B business and what do they do in B2C business?
Yeah. So B2B is the main part of the business. Around 90 to 92% of their revenues come from B2B, which is coffee processing, and most of the B2B businesses outside of India, it's all exports.
Hmm.
So the mix for both B2B, B2C as well as the exports and domestic is 90-10.
Okay.
Okay, so B2C is something they started in 2022 when they decided to start their own brand called Continental Coffee, and they also started their own cafes and kiosks in the southern part of India. So as you know, southern part of India is the coffee market. It's around, I think, 70% of the coffee market of India is from the south. So
Right.
uh, mainly they started their B2C business from the south, and they've mainly expanded over there. When you see marketing, they've even started their own small cafes, and they have around about 4,000 vending machines through which you can get their coffee. And
Okay.
their retail reach is also quite large now. It's around about 1 lakh outlets their distribution has reached. It's
Hmm.
nothing in comparison to, like, say, Nestle and all of that. Those companies have penetrated much more, I think easily more than like 20 times. So in India, their market share for B2C is very, very small, would be, I think, below 5% if you take pan India. But in South, I think their share would be a little more, maybe close to double digit. But the lion's share is still with companies like Nestle and Brew, which is by I think HUL. Yes, Brew is by HUL. So those two have a much higher penetration. But like this is something recent. So I think in 3 years they've done quite well for themselves, and they're slowly scaling it up. So B2B is 90%, where, as we discussed, it's all about coffee processing. They provide it to clients, and
Okay.
it's all across the globe. They do it in North America, Asia Pacific, Europe, Russia, everywhere.
Got it. So now sticking to the B2B part of the business. So why do you think customers choose to outsource their coffee manufacturing to CCL? मतलब what उनको क्या ऐसा फायदा या advantage हो रहा है? Because companies in the West are known for selling much better consumer products.
Hmm.
So why are they getting manufactured by an Indian company?
So it's a good question. So the main reason why they do this is so that they can focus on other parts of their business. They outsource this part to CCL because, as I mentioned earlier, CCL caters to around 1,000 types of blends, right? So for a company to, instead of setting up so many capacities, if there's a ready-made player who can, meet all their needs, it's completely, checked, verified. They can focus on other tenets such as growing their sales and focusing on marketing. So
Hmm.
that's the main reason why they've chosen to outsource, because it's quite a hectic business to source all the coffee beans, manufacture, process. The value chain, as I explained, is quite long. So a lot of time, a lot of money would go into setting up all of this. So for a lot of companies, it becomes logical to outsource this to CCL, because they can then grow on other parts of the business, and they don't even have to face too much of volatility. The contract price is decided early on. It's a cost plus contract as per CCL. They are able to much easily predict what their top line, bottom line would be if they were outsourcing the entire production. Otherwise, a lot of other elements come into this entire process, where it comes to coffee pricing, procurement, if there's any changes in weather, all of that, there's multiple risks. So if you're not if you're passing these risks on to someone else, it's much more better for you, right? As a business owner, you can
Hmm.
focus on scaling up your business much more efficiently instead of focusing on these nitty gritties. And I want to also mention another very important point is that CCL has no plantations, right? They also have to source their coffee from other
Correct.
countries and other people who have their plantations. So this was the main reason why I bought this stock, is because they have no plantations. Any
Okay.
plantation company in India, if you see, it's a huge task to manage everything when it comes to pest control. There's so many factors involved. You would not want to be invested in a plantation business because it's a very asset heavy business. So I'd much rather go for a coffee processor than a coffee planter. You get what I'm saying?
Hmm. Correct.
In that. So that's the
Got it.
reason why companies have decided to outsource. And I'll also tell you why they'll not leave them also. Because
Okay.
once the entire relationship has been set, the switching costs are way too high for the company to, go to another coffee manufacturer. Because firstly, the blends and everything are quite confidential. The way the recipe is prepared, what is the specific kind of flavor you're trying to put, all these things are very confidential. You
Hmm.
wouldn't want to leak them out elsewhere. You're giving away a lot of competitive information. That's one part. And the second part is that you're getting a one stop shop, as I told you, and a lot of time goes into quality inspection checking. So to even get accepted as a customer, I think 6 to 12 months is just the pilot testing period, where
Hmm.
you're just testing that are all the samples coming through properly. And it also costs a lot of money to set up the testing. Like it'll maybe be quite a few crores of just spending money on sampling and testing whether the coffee is of the right grade. So for this reason, like, the contracts are very sticky. You'll see a lot of repeat business for CCL, and most of their clients will be with them for multiple years. They'll not be able to leave because it would be a huge change in their business.
So, taking on thing that you said, like कि they will have to
Mhm.
share their trade secret, कि
Yeah,
क्या blend है, everything. So, is it possible that CCL would be sole manufacturer for many of the brands? Probably, let's say, for example, Blue Tokai. So, Blue
right.
Tokai का जितना coffee बनता है, everything is manufactured by CCL. Is it possible?
Yeah, so for a lot of these brands, single source exclusive supply comes only from CCL. They control a lot of coffee supply in India. So quite a
Mm-hmm.
few chains, I think single source comes from CCL.
Okay, that's interesting. मतलब, so essentially the customer is not diverse. Generally, what your customer does is they try to diversify their supplier base. कि
Yeah.
इसके थ्रू डिलीवरी नहीं आ पाई तो इसके थ्रू आ जाएगी नहीं, राइट?
तो जो
बट
छोटे कंपनीज करते हैं ना, वो ऐसे करते हैं कि वो सिंगल सोर्स को मैनेज कर सकते हैं. व्हेन यू रीच अ scale of say someone like a Nestle, then the point you're saying makes complete sense. Then they might want even to diversify with some other players which I mentioned earlier, who are in Indonesia, Vietnam, Brazil. They can also diversify there. It depends on your size of the operations.
राइट.
If you're very small, then it doesn't make sense कि आप इतना माथाफोटी करो कि इतने suppliers से आ रहा है. You would much rather focus on doing it from one place. But if you're
करेक्ट.
doing it from on a very large scale, you'd want to diversify your manufacturing.
Hmm. Fair point. So now considering it's a B2B business, obviously there is a added risk of customer concentration. So
Hmm.
how does that customer concentration look like for CCL?
So I think in one of the recent con calls they mentioned not even one customer of theirs makes up more than 10% of their sales,
Okay.
and they have around 400 something clients globally. So it's quite well spread out. So even if they were going to lose one customer, I don't think the dent would be that large. So top
Hmm.
10 customers would be around about 40% though. That is quite a large number. Top 10 customers of CCL would make up 40% of the revenue.
Okay. Okay, but then there is again switching cost element, right? It's difficult to switch, right?
Yeah,
For
exactly.
hmm.
So that's what these multiple factors led to me liking the company, that there has to be some kind of barrier to entry. Now, you tell me who else can afford this kind of capex to be a new player and enter this market, right? It's a very expensive capex procedure to even reach the level of scale. Like for someone who wants to set up 77,000 tons of spray dried, freeze dried coffee, the cost is huge. As I mentioned, it's around 7 lakhs per metric ton. Imagine 77,000 into 7 lakhs. How much ever that comes to would be the capex cost for a new entrant who will have to
Hmm.
set up all the relationships again and do the entire procedure from scratch.
Correct. Hmm. Fair point. Uh, so, okay, so we got a fair bit of idea about the B2B business. Now, coming to the B2C part. So, what do you think would be the strategic rationale for having a consumer brand? And when we look at this as an outsider, there are two questions that come to my mind. First,
Hmm.
uh, having a B2C brand is a natural extension for something that you're expert in doing.
Right.
But on a contrary, there's another thought that comes to my mind, and it is that running a consumer business requires an altogether different skill set, which is not limited just to making a good quality product, right? There are
Mm.
many other skill sets that you're required to make it a successful product. For example, uh, if you look at the paint industry, there are hundreds of paint companies that will tell you they're making paint better than Asian Paint, who is the market
Right.
leader, right? So I'm pretty sure making a good quality product is not the key to being successful in a
Mm.
consumer kind of a company or
Very
a
true.
consumer side, right? So what's your thought on this?
So very appropriate question. So they started this, you can say, after 1995 and 2022, they decided to go their own brand way
Mhm.
because it's a, as you said, it's a natural extension. What also happens is that when if your own brand does eventually start scaling up, the margins are much higher because you have pricing power. That's number one, where they are looking at expanding their margins. After a point, you need some new innovation where you can look at the next leg of growth.
Mhm.
So that would be
Okay.
one part where they thought that this would be a good idea, considering they have very good contacts in the entire coffee industry. Their name in the market is there, so it's much easier for them to market themselves. Uh, because
Okay.
if you're a complete random, you won't be able to penetrate this market so easily. Like
Correct.
maybe I might try a coffee once, but I would be a little hesitant if I've never even heard of you, right?
Correct.
But here they have a proven track record that, and if they marketed themselves in a way that they already, provide coffee beans to everyone else, me as a consumer, I would think that, all right, these guys already know the entire business. Let me try something different. They might have come up with some new kind of flavors because a good product in coffee means you're trying something different. Like I was mentioning the kind of blends and flavors, right? You're trying to come up with something new. Like I
Hmm.
didn't see any other company. Like when you go to a supermarket, you don't see companies giving you flavored sachets along with the coffee. Like this was something new. So this is where the innovation came of use, right?
Hmm.
So this is why I feel that B2C was a natural progression for their company. They would have to
Okay.
do it at some point because after a point, where else will the growth come from? They even tried some other products such as mock meat and all of that, but that did not work. And I'm happy it didn't work so that they could focus on what they are good at, which is coffee.
Okay. And when was then?
Right? This was,
When did?
I think, around 5 years back, 4 years back.
Okay.
Yeah.
Okay. Interesting.
So they had even tried to get into mock meat, but uska kuch hua nahi itna. So
Uh,
they shelved their product and focused just on coffee. And now their coffee business, their own B2C brand is growing at around 40% CAGR last few years. So they've been pretty frugal. They are doing it slow and steady. So the management, I'll tell you one thing about them. They do not care about the stock price. They are looking at building scale, slow and steady. They don't want to jump too fast, is what I could understand. They are looking at 15-20% consistent growth over the years, and that's where has helped them reach where they are today because the kind of capexes they've done, the kind of debt they've taken, they've been very strategic as to, you'll see time and again, almost every con call. I don't understand why it's so difficult to understand the business. The analysts keep asking the same question again and again, exact same questions, and it doesn't get through people. Like
hmm.
after a point, I don't even attend the con calls anymore because I can already predict what's going to be asked. Why are you giving a dividend if the debt is so high?
Hmm.
Questions like that. It's a very capital intensive business. So they have 2000 crores of debt, but also look at what is the payoff period. That if
Hmm.
all their capacities are being utilized, they've only done capexes when their capacity has been maxed out. They've not done it when their utilization is 50-60%. It's already exceeded 85% optimum utilization. That's when they go for the new capex.
Hmm.
So the management is a lot smarter than the analysts. They know what they're doing. So I trust them a lot more as to the entire progression of the business. They've not hurried up into this. They focused on the South first in their B2C brand, and then they are slowly going to penetrate more and more.
So do you think to become successful in that consumer side of business, does the management have that skill set required to actually succeed in that part of the business?
So their CEO, Mr. Praveen Jaipuriar, he's brilliant. He's been part of this entire marketing and sales function over many years across the food and beverage industry. So he knows this business very well. He knows what it'll take to scale up, and he's also doing it frugally. They are not overspending. I feel now their ad spend should go up over here, advertisements and marketing is, as you know, very important for a B2C brand. So if you look at I was just having a look over the last 5 years, their advertisement and promotion as a percentage of sales has varied around 2 to 3% of
Mm-hmm.
sales. It's not been very large. I feel
Okay.
this will scale up as more and more acceptance comes up. And in the last few years, they've really amped up their marketing in terms of, and they've done it frugally, like in metro stations in Bangalore, you'll see hoardings. I'll share the pictures with you where they've got like kiosks, then this Contico Cafe where the brand recall is starting to come.
Okay.
So they're just doing it very slowly and steadily. You have to give it time. Like, see, it's a very small part of the business. It's around just 8 to 10%. If this becomes 20%, their aim is to eventually get this to 20 to 25% in the next few years.
Hmm.
So once that happens, then we'll see the real, trajectory of where this can go. Then the re-rating of valuations happen. As you know, when the B2C share increases, you're seeing more brand recall. Then you're becoming a proper brand, right? Contico and Continental Coffee becomes a proper brand visible, like how Nescafe is, how Brew is. So that takes time. It's not going to happen over 3 to 5 years. It could take a decade easy. So I'm willing
Hmm.
to see the journey play out because I can see that my generation's acceptance towards coffee has increased. A lot of informal meetings, a lot of important meetings happen over coffee now. If I want to meet someone new for a business meeting, I'll take them to a coffee shop. So coffee has become a way of just meeting people, which wasn't
Hmm.
the case like 10, 15 years back as much as it is today.
Correct. Absolutely true. So, coming to the product that you mentioned, that while the ideation part, that
Mhm.
they used to provide hazelnut as well with along with the
Yeah,
coffee, right? So,
right.
what are the other products these guys are offering, which is bit differentiated compared to the market?
So they have these flavors called, Malgudi, Chikori. These are very, I would say, close to the south. So it's very specific there. Like when you taste the coffee, you'll understand that there is something different about the taste. Like you'll
Okay.
immediately understand it's not ordinary. There's some special blend or some particular technique that they've done to, manage to do this. So
Hmm.
they have instant coffee as well as, processed coffee as we discussed. So I have a few pictures also of their products. I'll just tell you
Okay.
what they are called. Like they also give you premixes, they give you instant coffee, premium coffee, and flavored coffee. Like the right way to explain this to the public would be through the photos which I'll share with you. So it would be easier to
Sure.
explain.
Sure.
It's like very particular flavors written on the on the packet, which will convey what exactly I'm trying to say.
Hmm. Okay. Now it.
Yeah, so I mean, I understand that the company is now focusing on B2C business. Segment is growing fast. They are doing everything that is required in terms of building a brand, etc. Now,
Hmm.
what I want you to tell us is that, so currently, from what my understanding, tells me is currently the domestic B2C business is in the investment phase. That's one.
Yeah.
Because you're going to invest a lot in your brand, you're going to create an image for yourself and try to scale your B2C business. And in all probability, when any consumer company goes through this phase, there is either subdued profitability or the
Losses.
business runs into losses. Now, as CCL, what they have done is they have also acquired some brands in Europe, and
Yes.
they are going and building a B2C brand in international markets as well.
Yes.
So, I mean, uh, on one side, you have your domestic business, which is in the investment phase, which is either bleeding or making very little money for you. On the other hand, you are going and acquiring,
Hmm.
brands in the UK or Europe, and then you are trying to build an international B2C business as well.
Hmm.
So how do you, I mean, mix all these three things, right? One more thing is that you, as you mentioned, that they already have a huge amount of debt on their books. So one, you
Right.
have debt. Second, your Indian B2C business is in a building phase. You are
Hmm.
foraying in the international market where again you are trying to build a B2C brand which is expected to attract a lot of marketing expenses as well. So how do
True.
you relate all these three and you know uh, explain to yourself that yes, this is a move which sounds, proper to me, or what could be the thought process of the management? Very difficult for you to pinpoint, I understand, but in your understanding, what could be the thought which would be going, in the mind of the management who's running the company with all these
I think
things?
is the answer to this is two simple words, which is cross-selling. They are just mainly
Okay.
trying to focus on cross-selling because their B2B business can also be used in the same way abroad. So even the acquisitions that they've done abroad are very small. It's not very sizable acquisitions. They've acquired companies like Percol, I think was one of them. And there are a few, three, four more coffee chains. I think one was something Wharf, if I'm not wrong. I can't remember the exact name. There were three
Okay.
or four companies that they had acquired very small scale. So what the point is, as I mentioned, is that their B2B business can be cross-sold eventually through this. It can become a way of, you know, added distribution for these companies. So I would say it's a pretty sensible move. I understand that there is debt, but these are all very strategic investments where the long-term payoff is very high. Like we as analysts, we look at 1 to 2 year of forward earnings. These managements are not looking at it on such a short-term basis. They are looking at over say 1 decade, where can I reach with these partners along with me. So the thought process and horizons is very different when it comes to us versus when it comes to them. That's why, as I was saying, that this company is quite misunderstood, is that it's taken so many years of scale. You have to wait out for the capex to completely be utilized. Then once the capex is completely utilized, the debt gets paid down, right? And you even look at the breakup of the debt. The 2,000 crores debt, not all of it is long term borrowing. Around 1,200 crores will be working capital and 800 crores will be long term debt, which is for capex. So working capital gets stretched due to coffee prices, which we'll talk about a lot more in depth. I have a lot to say about that. How coffee prices work is a very interesting subject. And
Okay.
due to this reason, I'm saying the debt part, ignore it in the sense that 800 crores is the actual real debt, because 1,200 crores is debt as per normal course of business. So they are very comfortably able to manage that. They've done it time and again across various coffee cycles. Uh, as I mentioned, from 3,600 tons to reach 77,000 tons without diluting any equity, it's no easy joke. It clearly, shows that the management knows what they're doing. So I trust them. I know that they have the capability to build, and they are using their existing global relationships to, expand. And you need to. That's why I was saying that the reason for them to naturally extend towards B2C is that they can use their existing relationships to, expand in the future. Like that's the entire point of having all these relationships. So I feel that whatever they're doing is quite strategic. Initially it might not reflect on the PNL, but these things can't be quantified as to where they can eventually be, because India is not as penetrated as these foreign markets are. The acceptance of coffee in other developed economies is much higher than it is in India. Over there it'll be much easier for you to market the product if it's something different. Like me as a coffee connoisseur, if I'm in London, like I see a coffee shop every 300 400 meters over here. So there's various
Hmm.
types of coffee. People are always willing to try new places. It's much more easier to penetrate here, and it's already a created category over here. And I feel that if there's some new niche that can come in here through the acquisitions and all the tie-ups that they've done, I feel that it just increases their global presence. And a B2C presence can maybe lead to a B2B contract. You
Hmm.
get what I'm saying? That's what the cross-selling part of it is.
Hmm. Perfect. So,
Understood.
so yeah.
That's
So,
what I understand as per, like, this is my understanding. I could be wrong.
got it. Uh,
Yeah.
Fair point. I think they've mentioned that they will get some B2B contracts from their this Europe acquisition. Uh,
Right.
okay. Okay. So, coming to their unit economics per se. So, CCL deals obviously with coffee. And as
Mm.
you mentioned, that coffee is the second most traded commodity after oil.
Yeah.
And one thing is for sure that commodities come with a lot of volatility, right?
Mm.
And so now there are three questions to it. First, uh, has coffee seen that similar kind of volatility, uh, which we generally allude when you consider कि commodity है तो मतलब volatile होगा.
Mm.
And how does it impact the business of CCL? That is second, when you see that kind of volatility. And thirdly, how does it nullify the impact if it is able to?
Okay. So I'll
Both.
explain how this works. This is, I think, the most important part of the video to understand the business, understand the business. So coffee prices have cycles, right? And it completely depends on two things, which is, has Brazil seen good rains and has Vietnam seen good rains? There are two
Correct.
harvesting cycles in the year. One happens in Brazil and one happens in Vietnam. So what happened in 2021, 2022 is that there were droughts in Brazil. There was some frost, which, destroyed a lot of crops. Then even Vietnam had some issues in weather, due to which around about 7% of global supply was lost. So the demand was outpacing the supply, and that's why the coffee prices have gone from $1,000 to $5,000. There's been a 5x increase in coffee prices
Wow.
because of short supply. Coffee is addictive, right? I have it every single day. I can't do without it.
Hmm.
So this is not an ordinary kind of commodity. It's a commodity which I require no matter what happens. That's why I like this business, that it's a commodity, and you would need it no matter what happens. Like, I'm not saying it's like a sin kind of thing, like how alcohol is, आपको alcohol हर दिन चाहिए if you're an alcoholic. It's not that way. It's, coffee becomes like a morning beverage for a lot of people. So that's the reason demand, no, it's been quite inelastic, that even if coffee prices have gone up, I have not stopped drinking coffee,
Hmm.
right? That's the key part of this. And people get addicted to coffee. Once you start having coffee, you don't want to switch to tea again. The taste doesn't, match, and the caffeine effect is also not the same, right?
Correct.
So due to which coffee has been on an uptrending price cycle. One is mainly due to the droughts in Brazil that created a short supply kind of scenario. Now, what we'll understand is, in July there'll be one harvest, and then in, I think, between October to Jan there'll be another harvest. That will decide, how much will the supply increase by. If the supply increases, then coffee prices can moderate, right?
Okay.
Uh, So CCL Products, as the management has time and again said, is that they don't mind if the coffee prices are too high or too low. They just want them to be stable, right? Because if they are stable, they are able to price the contracts much more appropriately. What happens
Hmm.
is that when coffee prices are so high, their clients don't want to take very long-term contracts. They want to take short-term contracts because they feel that coffee prices will eventually fall. And once they start falling, then the clients will think they'll fall some more. It's that typical mentality of a business owner who's just going to try and see that what's the best price I can get. So they have, been destocking their inventory. They are keeping inventory to bare minimum levels, like, as you call it, just in time inventory, कि जब भी requirement है तभी जाके ये लोग coffee beans खरीदेंगे. They don't want to stock it up too high. They might see inventory gains, but eventually it will become a drag on their working capital, which is
Hmm.
exactly what happened with CCL. For the same coffee that costed 1,000 earlier, now they have to have working capital needs equal to 5,000,
Correct.
right? So due to which I feel now their working capital debt has peaked. I don't think it will go up anymore from here. Deleveraging will begin from next year once the
Hmm.
capacities start coming off and the coffee supply situation also improves, right? So it's
Okay.
entirely dependent on the harvest cycles. I've prepared a table. I'll share that with you.
Okay.
It's a very interesting thought procedure as to how the supply of coffee gets decided. So
So
the
so
main
it's
reason
interesting
for,
that
yeah,
yeah. So interesting
go
that
ahead.
you mentioned that about long-term contract and short-term contract. So let's say in a condition where your coffee prices are stable, so that time your customer or CCL's customer basically enter into a long-term contract is what you're attributing to. एंड वो
Yes.
चीज काम कैसे करती है मतलब वो बोलते हैं कि अगले 1 साल की मेरी सप्लाई इतनी रहने वाली है, आज ही अपन ने प्राइस फिक्स कर दिया एंड दैट्स इट कि कैसा रहता है वो चीज?
इनका कॉस्ट प्लस कॉन्ट्रैक्ट रहता है कि ये बेस कॉस्ट रहता है एंड देयर इज अ प्लस मार्जिन ऑन दैट. That's how all their contracts are priced. So one thing what happens is that over the entire year the prices average out. Sometimes there's up cycles, there's low cycles. Over the year the entire price impact gets pretty much nullified. But this has not been able to happen in the last 3 years because of the climate risk
ओके.
that short supply has happened. That's why this price has not been able to be adjusted in the entire year. That's why they've had to take a lot more working capital to just fund their inventories. And they are having to hold inventory for longer periods of time. So if you see their profit and loss in the last few quarters, there are inventory gains for this particular reason.
Hmm. So, so you said the working capital cycle or working capital ज़्यादा बढ़ गया है.
Hmm.
But if they are following cost plus model, let's say कॉफी कॉस्ट 100 रुपए की कॉफी है वो 120 में बेच रहे हैं फॉर एग्जांपल. नाउ सडनली दैट 100 रुपए का आइटम 500 रुपए हो गया. तो
Hmm.
आपको 500 रुपए में खरीदना पड़ रहा है. यूर सेइंग वर्किंग कैपिटल बढ़ गया, बट उन्होंने कॉस्ट प्लस के हिसाब से तो उन्होंने 520 530 या 550 में बेच दिया होगा. So
Right,
when I
right.
actually look at as a percentage of revenue, then it should be same, right? मतलब why will it change?
Yeah, very fair point. So that's why they keep mentioning again and again that look at EBITDA per kg. Don't look at the absolute EBITDAs. You have to look at the entire impact as on a per kg basis, which will
Okay,
largely remain stable because the entire cost is passed through
okay.
to the customers. So their EBITDA per kg is not very volatile. Their EBITDA margins can be optically volatile. And another important point is कि आपको वो quarter में कौन से contracts मिले थे. If it's a higher margin kind of contract, then the margins go up because the
Mm-hmm.
mix of the revenues have changed, right? If
Okay.
freeze-dried coffee के orders ज़्यादा आ गए, then you'll see higher margins in that quarter. So it depends on the mix. It's very complicated that you have to even look at it on EBITDA per kg as well as the absolute profitability due to higher margin contracts.
Hmm.
So
So it
Nitya, I have
depends on
two
the,
follow-ups.
yes.
Sure. So I have two follow-ups here. One is on the B2C part again. Now that you said key coffee price from 100 to 500, the 5x move. So I understand that in a B2B setup, your customer is also aware of the external situation, and since he or she is also into that business, he's ready to adjust accordingly. But on
Yeah.
the B2C side, you cannot where you are selling where you are selling coffee in small pouches.
Mm.
It's very difficult for you as a company to keep on changing your price constantly, right?
Yeah.
Either you have to play through reducing or increasing quantity or some other way. So how is CCL kind of mitigating the impact of increased coffee prices as far as B2C business is concerned?
So even the peers such as Nestle and Brew have also taken price hikes, and even CCL has taken price hikes in the last few quarters. They've taken a price hike of around 30 to 35% on an average in their B2C business. And the grammage and margins are much higher on smaller pouches and smaller sachets. So there they are making more money anyway, and the price hike there won't be as much as it is for the bigger pouches. So the price hike
Okay.
there will be more.
In smaller ones, you're saying,
No, in the larger pouches. I think in
in
the
the larger
smaller
ones.
packs, they have not taken such big hikes. Over there, the hike would have been lesser because any which way the grammage is better.
Got it, got it. So what
Hmm.
you mean to say is that I was already earning a very good margin in smaller packages. Now,
Yes.
because of this price volatility, that margin might have taken a slight hit, which I'm okay with. So the situation is, as it is from a grammage or price hike perspective. Okay.
Exactly.
And second follow-up was on, the inventory thing which you were saying, and you also mentioned that this 1,200 crore worth of debt, which is currently appearing on the books, is for the inventory.
Mm.
And you also said that customers are giving shorter contracts to CCL because of the sudden
Prices.
up move that has been seen in coffee prices, right?
Right.
So what I am trying to understand here is key CCL in a way. So I'm trying to relate these 2 points. On one side, I am taking debt to fund inventory. On other side, I am receiving smaller tenure contracts. So
Mm.
is it fair to say that currently CCL is holding inventory on behalf of its clients?
In a way, yes, it is.
Okay.
That's why you're seeing the inventory gains on the profit and loss, right? Because technically they are holding inventory that as and when suddenly, for example, if coffee prices fall down a lot, there might be very high demand and they'll be able to cater that demand when others have not been holding that inventory, right? And when they're
Perfect.
taking quantities in such high quantities, you're also going to see better pricing over there due to economies of scale. So when times are good, they'll have all the inventory ready to ship.
Perfect, perfect. So just to simplify, just to simply understand the kind of, money CCL makes. So CCL
Mhm.
gets paid for two things. One is processing the coffee and making it in the right blend for the client, and second,
Right.
sometimes holding inventory for the client. Is that a fair understanding to make?
I mean, I wouldn't read into it that much because inventory gains
Okay.
eventually even out. I wouldn't go too much into the fact that they are holding inventory on behalf of the clients, but look at it as an advantage that when times are good, they have the inventories
Excellent.
ready to, and then their growth will be much faster than their peers because they have this available.
Perfect. And you also mentioned, one thing that management keeps on telling key, look at my EBITDA per kg or EBITDA per ton. Now,
Right.
let's say if we talk about per ton basis,
Mhm.
let's say I have to sell 1 ton worth of, coffee. What are the major costs if you can, break it down in terms of percentages and eventually tell me, let's say if I sell 100 rupees worth of coffee,
Hmm.
these are the expense items that I have to incur, and eventually this is the EBITDA per kg that I as CCL products, is left over with.
So I don't remember the exact numbers for EBITDA per kg. Should be
Ballpark
around about,
numbers should be fine.
yeah, 120 to 130 rupees per kg का EBITDA मेरे को जो याद है वो रहता था. But I'll tell you the basic structure of the business is that the gross margins are between 40 to 45%. EBITDA margins range between 15 to 20%. This is the base idea depending on coffee prices. As I also explained that EBITDA margins are a function of coffee price volatility as well as what kind of coffee is being sold in that quarter. Right?
Gross margin
Uh,
will be a function of that.
both EBITDA margin as well as the gross margin.
Okay,
Okay, mainly more as for the gross margin, you're right. The
understood.
gross margin will expand more when the higher margin contracts are included in that. So 45 to 46% on a higher basis you can see is in the gross margin. And after all the costs, marketing costs, and all of that, you can reach around 16 to 18% EBITDA on an average. You will notice.
Perfect. So what we are necessarily trying to, tell here is key if I'm selling 100 rupees worth of coffee,
Hmm.
anywhere between 55 to 60 rupees is something I'll spend on my raw material, which is coffee. And
Exactly.
then
Yes.
out of that 40% or 40 rupees of leftover gross margin, I will spend another 25 to 30 odd rupees on operational expenses, which will result in
Yes.
a 15-18% kind of an EBITDA.
Right.
Perfect.
Exactly.
Perfect.
Okay.
So,
So now coming to since we discussed about capex in the initial
Mm.
part of our conversation, and you mentioned that management generally does capex when there's some amount of visibility, and I think they
Right.
recently completed very good capex in last couple of years. So where do you think this growth is really coming from for them? मतलब उनका सी growth visibility कहाँ दिख रही है? Because I think this is a very stable category, right? I don't think industry wide or globally this industry might be growing at a high double digit or something like that. It might be growing at low single digit. So where are they really seeing that growth?
So as you mentioned that, it's quite a mature industry globally. The
Hmm.
growth rates are not very exceptional, but the capacities that they've set up are also, if you go to see, higher margin, right? That Vietnam is a freeze-dried capacity that has come live recently. So
Hmm.
whatever new capacities that have come on board, they've had discussion with their clients. They are clearly seeing that consumption is going up. That's the reason they've decided to put up these capacities on basis of conversations that they've had with their existing clients. They are accordingly taking a call that we should expand now. And now, by the way, they won't need any more capex for the next 3 years or so. They already confirmed this. So it's
Okay,
already set up a large base for a lot of time.
got it. So you I think on the competition, you already mentioned a few of the competitors when you compare it to the scale.
Yeah.
But reiterating that question, so how is it, CCL position compared to competitors? I'm not talking the size because you already done that, but in terms of advantage, uh,
Mhm.
कि competition किधर position है, ये किधर position है in terms of आज मुझे अपना एक brand चालू करना है, why
Hmm.
will I basically go to CCL over its competitors? Is what I'm trying to understand. And secondly, on the B2C business, who are they actually competing with?
Yeah.
Yeah.
So B2B side would be a little bit difficult to explain because I can't really understand how exactly the client for CCL would approach another company. Like those conversations are pretty confidential, like they don't come out. So it would be
Mhm.
a little bit difficult to understand that. But on the B2C side, I can give you a little bit more color that they have basically underpriced their product in comparison to Nescafe and Brew. So I
Okay.
even made a table for this where I'll give you a quick idea of the pricing.
Sure.
So for example, if CCL is making a 200-gram pouch of coffee which they are selling on Amazon.com, that price would be 225 rupees. If Brew was selling the same pouch, it would be 280 rupees. So you're seeing
Okay.
that there's quite a divergence between the two. They've clearly underpriced themselves from Brew.
Hmm.
And
Compared
even
to
for example,
Nescafe?
compared to Nescafe, Nescafe is even more expensive. It's at around 385 rupees if it's
Okay.
spray dried part of
Okay.
coffee, and if it's freeze dried coffee, Nescafe is 448 and CCL is around 300.
And you would say, since you have tried the product, I think I have also tried the product. I think
Mhm.
the feel for the product is far superior compared to Nescafe, or you have
Yes,
different,
it's richer.
etc. Right? So why is the difference? Matlab, why is Nescafe not willing to give a richer taste at a higher price versus Shisha is willing to give that thing?
I mean,
What's
I think this is where your skill comes in, right? If like a particular company has that way of brewing, roasting, and performing the entire value chain with some, additional secretive factors which might be part of it, that's the reason they are able to get that distinct taste which maybe other brands are not able to get. So
Hmm.
it's just not that well known yet, like you're one of the few people who I know who's tried their coffee. Like many people are not aware of the brand. So as I mentioned, it takes time.
Hmm.
Eventually with time people will start accepting the brand because this works on word of mouth. Like Aniket told me that he likes it, that's why I tried it. Otherwise
Hmm.
अगर मैं सामने से जाके देखूंगा कोई शॉप में, मेरे को स्ट्राइक नहीं होगा कि I should buy this unless someone has mentioned this to me. So slowly and steadily brand recall will come through, and they've priced their products quite smartly, so that should help them eventually. There should be a reason for me as a customer willing to switch, that why will I buy another coffee. One is
Correct.
price, and second is if I hear something very special about the product, and
Correct.
here you're technically getting both, so it's a good value for money kind of proposition.
Hmm. Interesting.
Yeah. Like you even look at, I'll send you a few stats as to how people even accept their coffee. Like what are the factors that go into them choosing a particular kind of coffee. It's quite interesting. Like I won't take it very, very literally, but it'll give you a brief idea as to how people think. What factors matter the most? Is it like if you go to a coffee shop, is it that the quality of coffee matters the most? Is it the entire ambience of the place? Is it the way the staff interacted with you? Like these are these user insights which companies like Nielsen do, or all these databases do at from time to time. So you can
Hmm.
even share that with the crowd, so they'll be able to understand what are the factors in choosing the right kind of coffee.
Hmm.
Perfect. Sure, sure. Definitely do share it with us, and we will do the needful. So, Nitya, I think we have covered the whole, landscape of the coffee industry initially very well, and after that, we also dived, deep into various facets of CCL products. We covered their capex, why they are funding the capex they are funding, the kind of exponential rise which the capacities have seen in the last 10 years. Uh, the difference between the kind of money that one requires to set up a freeze dried versus a spray dried plant. We also covered various aspects of the B2C business as far as CCL is concerned, why it is going internationally and why it
Hmm.
makes sense to expand B2B side of the business in India as well as overseas. So I think
Yes.
we have touched upon a lot of aspects as far as CCL is concerned in I think enough depth. Now, one question, this is going to be the final question from my side
Yes.
is, what are the, let's say from an investor point of view who is trying to either understand CCL or is already looking at the company,
Hmm.
what are the top, few KPIs that you would like to see as an investor? Ki, okay, these are a few checkpoints on which if the company continues to deliver, I am a satisfied investor. So can you just list them down and also give us the rationale behind looking at those KPIs?
Right. So I would say a few KPIs definitely worth looking at in CCL's perspective would be you should look at what the capacity utilization is. That is very, very key, which will make you understand that whatever capacities that they have put on, are they, yielding the right kind of cash flows eventually or not. If the utilization is not there, the margins will also take a hit because fixed
Yeah.
cost would be high. They'll not be able to optimize their capacity. Then you should look at freeze-dried coffee volumes as a percentage of the total volume. That will tell you if their margins can expand or not because freeze-dried coffee is higher margin. Then you should look at client concentration. I think we already touched upon. So that gives you an idea of are the revenue streams de-risked or not. That's important. For their B2C side, you should see each year how much is their distribution increasing by. Like as I mentioned, they've done, kiosks, vending machines, and 1 lakh retailers. You should see that in like 5 years, does this reach 2 lakh retailers? For example, has it reached 2 lakh distributors? So that means those guys are pushing the product and the brand recall will improve. So I would say distribution is key for such B2C brands. You need to look at the ROCE as well as the ROE because CCL has taken a lot of debt, right? So the ROE gets magnified due to leverage. So you will always see that the ROE will be more than the ROCE in the case of CCL. And that's where we make our money because when the debt gets paid down, you will see an EV reduction and a market cap expansion. That is the main thesis of this business that once the debt gets paid down, once capacities are utilized, you will see a valuation re-rating due to the deleveraging.
Mm,
Then what else can you look at? I think what part of the operating cash flows are going into capex. You can look at that. You should keep track of their market shares in India as well as globally. So, and EBITDA per kg, if it's staying stable or not, or is there a huge variance, you should look into that.
mm.
I think these are the pretty much main parts which you should be looking at. And just growth rates of markets where they're catering to. If they are seeing degrowth in coffee or some other new kind of product has taken over, just need to see the growth rates across economies for coffee as a market.
Understood, understood. But do you have any questions?
No, I think you covered it well.
Perfect. So I think we have covered the business of CCL fairly well. Once again, thank you very much, Nitya, for taking the time and appearing on Made in India and explaining CCL products very candidly, exactly the way you like to look at it.
Right.
So it was a really fun conversation and a lot of
Absolutely.
insights for us as well.
Mhm. Great. I'm
Uh,
glad I could, share my views on this company because like since years like I've always only heard criticism about this company, and
Mhm.
when the stock starts performing then suddenly people ask me why is it going up. So I said I told you so. Then so now at least there's clear ways for people to understand why I like this company because many people are always skeptical due to the debt, but you have
Mm.
to like you can't have standard filters for every company. That's why the nature of the business is very important. So I think through this video I hope that the nature of the business is communicated quite well and why it requires debt. It's capital intensive for a reason. It's not an asset light company.
I think
So
when you know to
thank you.
so
Sorry.
yes, just adding to your point, so it's very true about the nature of debt. So if your business is stable
Hmm.
and you are generating 15-20% kind of ROC in a very stable, sustainable fashion, then actually using debt is favorable because वो 8-10% का पड़ता है, तुम 15-20
Exactly.
टका निकाल सकते हो. So why not
Yes.
use debt compared to a business where your earnings are far more volatile. उधर
Mhm.
debt use करना is a very challenging part because you don't know next year तुम्हारा earnings आएगा नहीं आएगा
Exactly.
to pay off the debt. That's
You
when
could
it
be
becomes
finished
tricky.
if the cycle goes against you. So here, commodities such as coffee, your risk is much lower because no matter what happens, it's going to be consumed. तो आपके
Correct.
capacities तो utilized हो जाएंगे. Because if a chemical goes into a down cycle, manufacturing goes down, all these commodities take a huge hit if they've taken debt at the top of the cycle to build a new plant. That
Correct.
could wipe them out.
Correct. Absolutely.
So in
Okay.
that way, that's why I like this company, because if you can manage scale in a commodity, you are king. If you look at Hindalco, they've managed that. There's so
Mm.
many examples for this. Like if in a particular commodity, if you reach scale, you can make a lot of money, which I think is happening in CCL. I've seen their trajectory from a very small company. Now they've already become a, you can say, almost a mid cap
Mhm.
at today's valuations. So I feel that the management is slow, steady, conservative. They'll be able to scale this business to new heights each year. But anyway, thank you so much, Navid Bhai and Parth. I had a great experience, speaking with both of you.
Likewise.
So
Same here,
thank you
same
very
here.
much. Appreciate it.
Perfect. So I'll close this with disclaimer again. So please be informed that all the information that was shared on this episode was purely for educational purposes. There is no objective of making anybody act on this information. In case you decide to act based on this information, we again strongly recommend you to conduct your own due diligence or consult your financial advisor, right? And
Right.
please also be informed that the host and the guest may maintain positions in the securities of the companies that are discussed in each episode. So please, keep that disclosure very, very clearly in your mind before acting based on the information that is shared here. So again, thank you, Nitya, and it was a
Yes.
great time. Bye.
Thank you so much. Thank you.